This is Kyrill with Centerfin, and this is our collective weekly for the week ending September 13th, 2024. As always, we like to highlight a handful of things that happened this week that we thought were interesting to pay attention to. So this week we had some economic data, which is important. Most importantly, it was inflation data. So we had both CPI and PPI. CPI, which is the Consumer Price Index, came in at 2.5% year over year. The previous value was 2.9%. So it's continuing to come down. The core CPI, which excludes food and energy, came in at 0.3% month over month and 3.2% year over year, which was what was expected. And the sticky part of CPI that seems to be keeping it higher is the shelter portion of CPI. Shelter is calculated in CPI by something known as owner's equivalent rent. And that's been stickier to come down than most other portions of the CPI calculation. And we think that probably reflects the fact that there's a supply-demand imbalance in housing in the US. And it's something that we'll continue to monitor going forward. But the overall conclusion is that inflation continues to come down, and that will allow the Fed to cut interest rates next week. Now, the Fed was widely expected to cut interest rates next week by either 25 or 50 basis points, with the odds more with 25 basis points. Since the CPI report, the odds of a 50 basis point cut increased to about 50%. Come next week, we're expecting that interest rates will come down, and odds are that it'll be either 25 or 50 basis points. So the most important reason why we follow CPI is because it does have to do with whether or not the Fed is able to ease monetary conditions. And given that there were no crazy surprises this week, we think the Fed will be in the clear to be able to cut interest rates. Will obviously be very positive for lots of different parts of the economy. Next, we wanted to discuss gold. We've discussed gold a lot over the last year or so. We think gold is an interesting part of an asset allocation of a holistic portfolio for individuals. The reason we believe so is multiple-fold, but one of the main reasons is that for the last couple of years, fixed income has not been a real interesting part of an asset allocation for a holistic portfolio. And the reason being was obviously the Fed has been hiking interest rates, which has meant that the value of fixed income assets have actually come down. Now, as we go the other way, that might change. But over the last couple of years, gold has certainly been a more interesting part of an asset allocation than fixed income for client portfolios. And gold hit an all-time high again this week. It's up to 2575 as we record this, just below 2600. It's up a stunning 34% year over year, which is a crazy number for something like gold, which is some consider it to be a useless asset. But it does have portfolio diversification benefits. It is also a hedge against a weaker dollar, and the dollar has been weaker over particularly last couple of months. And last but not least, it offers a hedge against geopolitical risk. And with tensions continuing to be high in the Middle East and Europe and with China, it's potentially an interesting allocation for portfolios. We continue to monitor gold. We do think it continues to be an interesting allocation. It hit all-time highs again this week. And last but not least, OpenAI, which has been one of the leaders in this kind of new evolution of artificial intelligence and generative artificial intelligence, Gen AI as it's referred to, released its latest model called Strawberry. That was their name internally. And the big differentiating factor between this model and their prior model, which they only released a few months ago, so they're iterating at a very fast pace. But the difference in this model versus the prior model is that it can think before it answers. And so there's a reasoning built into the model, which is something that's relatively new. And if you are an active user of Gen AI, you will know that they're generally really bad at math because that's not really what they're designed for. Now, with this new model, what OpenAI claims is that if you ask it a math question or a chemistry question that it might have previously gotten wrong, this model is supposed to be able to think before it answers and should then be more accurate in those types of prompts and queries. And so we have not used it yet, and we will to test it out, but we do think it's an interesting development, again, and just speaks to the speed of iteration in this space. We do think AI will be a massive force in how we work and live over the next couple of years and decades. And so that's why we pay attention to the space very closely. In addition to that, OpenAI is set to be raising a finance round at a $150 billion valuation. Those are the rumors. And if that is the case, I think it would make it the highest valued private company in the world As always, please let us know if there's anything else you would like for us to discuss, and we will see you next week.